Charitable giving, remember, the tax man cometh, and April comes around every single year. So look at your charitable giving that you gave this year. Did you tithe? Did you do the things you wanted to do? And do you have excess money available that you could still make some charitable giving this year? How about this one? RMDs, the dreaded required minimum distribution. Remember, you have to take those if you're 72 years or older. So have you taken it? Now, where does it come from? It comes from your IRA accounts, but also if you have an old 401 and you no longer currently work at that employer, you would have to. So this is where it gets a little confusing. If you're, let's say, 74 years old and you're still working at the company, you're actually not required to take money out of that 401. But if you're 74 years old and you have an old 401 at a previous employer, you have to take a required distribution out of that account. And the penalty for not taking the appropriate amount of money out of an IRA or a 401 when you turn 72 or older is literally the largest in the tax code at 50% of the amount you didn't take. So you'd be forced to take the money out and pay a 50% penalty. Do not let this year go by without taking your dreaded required minimum distributions. For a lot of people, they tithe regularly. And this could go to not only churches, but charitable organizations, but this is just part of their life. It's what they do. I think this is awesome. I personally agree with this. But when you get that magical age of 72 and you've got IRA dollars, remember, individual retirement accounts, money you've never paid tax on, well, do you know that you could be setting up and having the required minimum distribution, the amount you must take, have that deduction come out and go to your favorite church or charitable organization and never hit your tax return? Let me tell you why this is so important. When you have that withdrawal never hit your tax return, you're going to pay less taxes on your Social Security, and you're going to pay a cheaper premium potentially for your Medicare insurance that you have to take when you're 65. So this is called having your RMDs go directly to a nonprofit or a tithing charitable organization. And when you do it appropriately, it can have great benefit for you as well. So think about this. If you already know you're going to give $2,000 a year to XYZ charity, why not have $2,000 come out of one of your qualified accounts, money you've never paid tax on, go directly there and lower your tax burden by $2,000, which can save you taxes. It's a win for everybody. So many people, unfortunately, are working with big box retailers, which is all good, but they never talk about taxes. You have to work with a real retirement planner that specializes in things like taxation. I encourage people to always seek out a fiduciary so you make sure you get the correct advice. But this is something that many people don't take advantage of, and they should, because it can save them a lot of money.